All right, so I think this is the first time that we've already hit like 100 people in the stream right off the bat, which is very cool and also no surprise. SCHD, it draws a big crowd, and that's what we're here to talk about tonight. I got my main man Russ, my main man Craig, aka SCHD Stan, aka Leroy Skywalker, the man of many names. Fellas, thank you guys so much for hopping on tonight. How are you guys?
Wonderful.
Go ahead, Russ. I'm good. I'm trying to figure out which way to... There he is.
So to me, Craig, you're on the far right.
Oh dear.
You're over here. They see oh wait, no, over there. See, even I'm getting confused. Well, fellas, happy Reconstitution Day, and all of you guys tuning in, all 160 of you, happy Reconstitution Day. I think we need to figure out how to make this like a national holiday for investors because it's a big deal. And in case you guys don't know what this reconstitution is, in a nutshell, SCHD and other ETFs do this every single year, every so often, where they'll basically shuffle around all the different holdings in the fund. So they'll take some of the stocks out, they'll put some new stocks in, and on Friday, the third Friday in March of every year, that's what SCHD does. And we just got the results today. Actually, we kind of got them yesterday. Craig was pretty sleuthy, and I actually want to hear this story because I didn't really get to hear it in full. You somehow stumbled upon the results before they went out here in the States today. What happened with that?
Yeah, I found them on through the Korean ETF that tracks the same index as SCHD. So, and I stumbled upon it. Somebody sent it to me on X. And then I found it on Reddit and then dug into it there and then was a little tentative to post it because I'm like, this is Reddit, this is Korean, and there was no link. Somebody just posted a screenshot. I was like, okay. And then I asked everyone, should I post this with the disclaimer? Of course, like 80%, I did a poll, 80% of people were like, yes, post it. I was still hesitant. But then I asked and I found a link, and it was a link to the Korean page, all in Korean. But I hit a Google Translate, read it. I'm like, okay, this seems pretty legit. It matched up with a lot of research I'd already done. Like when I'm seeing a stock like something tiny, like with like OVV something, I can't remember what the name of the company is. Some of the little tiny holdings matched up the ones I thought would come in based on doing the screeners. I'm like, okay, this looks pretty legit, and so I decided to post it. And the results came out today, and they were 100% accurate. So pretty cool.
Yeah, and correct me if I'm wrong, but the reason that it worked was because the Korean ETF follows the same index, which is the Dow Jones US 100 Dividend Index or something like that. It's the same index that SCHD tracks, the Dow Jones US Dividend 100 Index. So it makes sense that they would line up, right? If they're tracking the same index, it makes sense that they would see similar changes. And with that said, guys, in case you haven't gotten the news yet or haven't gotten the details, this is a post that Craig put out, I think yesterday or 2 days ago, maybe, Craig, over on Twitter. And by the way, I've got links to both Craig's Twitter and also Russ's channel into the description. You guys definitely check them out. I'm sure all of you guys are following both these guys already, but nonetheless, this is what we're rocking with. These are the results from this year's reconstitution. So they took out 17 different stocks. To me, it looks like the most notable ones were Pfizer, which I believe was the fifth largest holding in the fund prior to the reconstitution. BlackRock was another big one. I think that was in the number 9 spot. And then the rest of these, like US Bank Corp, MTB, Key Corp, the rest of these here, as we kind of go down the list, become smaller and smaller holdings. And I think so much so that LEG, Leggett & Platt, a fallen dividend king, was only 0.04% of the fund when it was removed. So real quick, fellas, what do you guys, before we get to the additions, what do you guys think of these removals? Are there any that you were kind of surprised by? What's your take on them?
Go ahead,
I
Russ.
think Pfizer's interesting, right? And Craig, maybe you can affirm if this is correct or not, but they bought Segan, I don't know how to say it, for $43 billion in December of last year, right? Or was it 23? No,
the end of 23. Yeah.
End of 23. Yeah. They bought. So I think that affected their their debt levels, and that probably is what got them booted from the index. I don't know, but Merck replaced them. I think Merck is a little bit steadier, more solid than Pfizer. But dude, that Pfizer, what was Pfizer's yield? Over 6%? Yeah.
We can look right now. So let me tell you. I think you're right, Russ. I think it was 6.4% in the trailing 12 months right here. And if we scroll down, we can see this is where they took on a lot of debt, where they made that big acquisition. So it jumped from, it basically doubled, right? And I mean, that's really the only thing, to your point, that I could see that would, maybe warrant it being removed from the fund. I mean, these payout ratios last year aren't that great, so maybe that had something to do with it as well. But
you got to remember they look at like SCHD is really focused on ROE and cash flow to debt, right? So and of course dividend growth. So dividend growth was lower, relatively, well, actually pretty low for any stock, and then their ROE was low for SCHD, and their debt was getting out of hand. And there was one other thing as well. They were all, because I did the screen myself and ranked all these, and it was near the bottom in in most of the categories except for yield, and specifically the ones that SCHD looks at. I think often people forget that just because a stock is doing poorly in this aspect or price performance or whatever it may be, it's important that we look at, okay, is that one of the factors that SCHD even looks at, right? And many times it's not. So the ones that SCHD looked at, the only one that was really doing well was yield. So it made sense. I didn't think it was going to get removed, actually. I thought I had it on the bubble. I did a whole set of predictions, and it was on the bubble because you have to drop out of the top 200 to be removed. It's not just dropping out of the top 100. So it was low, but I thought it would still make it because I thought it would still be the 200. I guess it wasn't. So it's gone. And a lot of people are happy about that, right?
I've gotten a lot of comments of people agreeing with its removal. With that said, I've also, kind of moving on to this next stock here, I've gotten some question marks about BlackRock. Do you guys have any idea why that one would have been removed? The only thing I could think of is maybe the yield just got too low.
Yeah, and that's absolutely it. That is SCHD's first screen. So that doesn't, you can't even stay in the index at all if you're not in the top 50% of dividend yielders from the universe that they select from. So that's the first filter. And even if you're not in the top 100 of that, you're out no matter what. So
that's why Broadcom got booted too, right? And that's kind of like one of the, I don't know if it's a fatal flaw, but it kind of sucks in a way. But that's right why we say you're buying the methodology. You're not buying the holdings that are in it. Yes, it affects the performance of, but you're buying the methodology. So, I hope nobody sold all their Broadcom and BlackRock stock to buy SCHD, because you're going to learn a lesson about the methodology.
I'll tell you what, though, I have a lot to say about that, because with stocks like that, right? So especially Broadcom, people were understandably upset about that last year. But you really have to think about this. This is a high yield fund. BlackRock was paying, like, at one point last year, less than 1%. You got to take trade-offs. The reason why SCHD's, not just the starting yield is high, but the reason why we're getting an 11 to 12% annual dividend growth rate is because the fund every year swaps out low yielders and puts in higher ones. So that's part of the process. If it's not doing that, you're not the reason we invest in it. If you want the growth is there. You might get the capital appreciation. If you get it, great. And historically, it has. Over the long period, it really has. And we'll get into that more too. I've got lots to say about that. And but you just invest in SCHD for the higher yield, for the dividend growth, for the stability. So when something runs up a lot in price, it can also come back down a lot, just as fast as it ran up. So there's more room for error there, and that's not what SCHD is there for. Now, if you want a stock like Broadcom, it's in every ETF out there, like every single one. It's so big. Seriously, if you look at even all the dividend growth ones, it's in VYM, it's in DGRO, it's in FDVB, and of course it's even in the top 10 of SPY, VOO, You name it. It's in everything. It's in the Qs. It's in everything. You're not missing out. If you want it, if you really want it, buy it individually, right? It's a growth stock at this point. It didn't start out as a growth stock, and that's why it was in SCHD, but it is now. And SCHD has to move on to that, or it's not going to be different from your other ETFs, from your other holdings. So you want SCHD to be different. That's why we invest in it. Now, if SCHD is maybe the only thing you invest in, which I wouldn't, as much as I love SCHD, I wouldn't do, unless maybe I was retired and I had enough money that it, covered my income. But otherwise, as someone that's got 10 years left or more, you need other stocks as well. You need other ETFs. So that's I can go for days about that.
Yeah. So basically, I mean, kind of tying it back to something you were touching on a moment ago. It's, even though it may cut the winners supposedly too soon, at the same time, just because of the stability factor, it cuts them before they have the chance to, come back down. If they see a crazy run up, you get to avoid the crazy come down if it should happen.
Yeah, and it's not always going to be right. It's not going to be right.
Right.
It's not about emotion. It's not about trend.
It's a trade-off for sure, but it's definitely come in handy, especially this year, right? And it's made a difference when actually, if we jump back over to the screen here, let me do that. No, that's not what I want. That's not what I want either. Bear with me, fellas. Let me find
There was a question about ex-dividend. I saw March 20th was ex-dividend, but I'm seeing Phildo and that guy saying it was March 26th ex-dividend. So
it's the 26th, and the payout's on the 31st. So, talking about the stability, it's as a result of its methodology, it's held up very well so far here, not only in the last month where it's seeing less of a drawdown on the S&P. Same with the year to date. If we zoom out over the last year period, it's not quite outperforming, but zooming out even longer, it's neck and neck. This is the total return, by the way, neck and neck with the S&P 500. And then over the last 10 years, in fact, I should actually probably use VU because I don't know if,
yes, I was going to say, you got to use VU or SPY because so
maybe that's going to tell a different story. So never mind, guys, cancel that. But still in the last year, we've, we're still pretty neck and neck. We do see a bit of a.
If you look at 5 years, I think it's pretty close now.
Yeah, I mean 20%. It definitely makes a difference.
Today was huge. Like Friday, they were almost neck and neck on the 5 year, but just probably today there was a huge. Today was a big day on the market.
Well, at least again, it goes back to Peter Lynch, knowing what you own, right? But you're not buying a SCHD to beat the market. You're buying it for that dividend and come in again. That speaks to what you were talking about with the methodology, which is why Broadcom and BlackRock were removed, right? It's you want that dividend yield to keep high and keep growing. So, it's why you have to understand the methodology behind it.
And I still believe over long periods of time that SCHD will do just fine versus the S&P 500 because you're not going to get the down 20 years. So people forget that those years happen, and then not 1 year. It takes a long time to recover. Sometimes it usually takes a long time. Lately, that hasn't happened. But if we get one of those periods where it takes a long time to recover, SCHD is going to hold up so much better. Then all of a sudden, the two charts come a lot closer. So we're talking 20-year periods more. These things really even out, and people forget that.
Yeah, it's been pretty hot these last handful of years.
Exactly.
So that pretty much covered all of the removals. If we jump back over here, this is a fine layout. I'm fine with it. I liked how it was the first time, but I don't know the hotkey to get back to it. That's too small. So we'll stick with this. So these are all of the additions to the fund now. We removed 17, we added 20, so we're seeing a net gain of 3 here. Some of the companies that were added were Merck. I think, Russ, you mentioned that already. ConocoPhillips. I've been getting a lot of heat for my pronunciation of this. So apparently it's Schlumberger.
Schlumberger. Hey, by the way, ConocoPhillips in like a rocket. It's the #1 position now. It's in and number one from
Kev. That's one of Kevin's most recent additions to his portfolio. But yeah, I called it Schlumberger. I got a lot of reminders that was wrong in the comments. Target.
Schlumberger.
It looks like Schlumberger. No? I mean, if you didn't know any better, I could go for some Fat Burger. I'll tell you that. Target. And Craig, I think you called this one. I don't remember if we were talking or you posted on Twitter or maybe in a comment here on the live stream. You called Target.
Yeah.
I remember you saying this one was going to be added. I think you might have called Merck too. I don't quite remember.
Yes.
Some of these on here though, you'd predicted, right?
Yeah, I think I got about 7 of the 17 I predicted. I got a bunch wrong, but I thought J&J was going in. I thought PG had a chance. I thought Nike even might have had a chance. I think once I dug in a little further, they didn't quite qualify because of the yield. But yeah, I did. I mean, for the first crack at trying to run all these filters on my own, I did all right. I think 7 or 8 out of the 17 is not bad.
What do you guys think of all these additions? And you guys in the chat too, let us know. What do you think of all these companies? Merck, Target, General Mills, Archer Daniels Midland, Flowers Foods, which has come and gone from the fund at least a couple different times. Same with FHI right here. I think this one was removed back in 2023. And now we're seeing it back in the fund. Maybe IPAR as well. That might have been in the fund before as well. I don't quite remember. But I know some of these have kind of come in and out.
Shout out Flowers Foods. They own Wonder Bread. They own Dave's Killer Bread. And
yes, I love Dave's Killer Bread. I love
it's
it.
expensive as hell, man. How do you afford it? It's because you got all those shares of SCHD. That's why you can afford Dave's Killer Bread. But real quick, I think 2 things. The sector shift, right? That 20.9% is energy now. So that's really interesting. And then the financials, which was always big, dropped, and that's now 8.4% of SCHD. So energy really going up there. With I don't know. I was reading Sunday Investors article, and I think he said it should help. The dividend volatility could be a little bit more, but it could help with inflation. Protect against inflation a little bit.
Trying to go to
the energy website aspect is really interesting. Like 21% energy now. That's a substantial amount. Could be interesting.
This is what it looked like before.
It's very defensive. Energy, consumer staples, and healthcare are the top 3, making up 21, 19, and 16%. So yeah, very, very defensive. Which is, if we do go into a recession or have economic issues, that's a great thing.
Man, nowhere shows the updated diversification of the sectors.
If you go on to my X feed, it's down there. It's like the 2nd or 3rd post down.
Okay.
I posted it today.
There we go.
Some of it, it's so early that you have to figure a lot of this stuff out yourself. So I do a lot of work. I put every new holding with the exact share amount and everything into Simply Safe Dividends and create like a play portfolio for it. So I've got all the information there. So that picture there, you can see, oh, there it is posted, but you could also click on the picture and it will show you the whole pie there. There you go.
Nice. Consumer staples in the number 2.
Yeah.
Wow. So financials really did take a big drop.
Yes, one thing I want to point out is shout out again to Sunday Investor with this article, but he put that the payout ratio of SCHD is now 62.96%, so 63%, which is up from 54%. So that could affect, right? That could affect some of the dividend growth if in aggregate they're paying out more of their earnings. So hopefully earnings grow, or else the dividend growth could stagnate a little bit.
Yeah, and I think he made a good point by saying that might affect the price more because investors might get, shy about buying the stock. That could affect the price appreciation. I don't get as concerned with that in this kind of short term. We only have to think a year at a time, really. So I don't get as concerned with that affecting the dividend growth as much, because if something bad does happen to some of those stocks, they'll usually end up getting removed by next year. And we usually still can grab that dividend this short term. It could, but you know what I mean? Like we really have to rethink the way we look at SCHD, because it does reconstitute every year. Some of these fundamentals, you can't look at them as like, oh, would I own this stock for forever? We're really borrowing the payouts from these companies, right? Like somebody said, like Dan Weston is like, if Ford stays in, we riot. We're gonna riot, right? And I'm like, listen. He made me think of it because he described Ford as like SCHD's like toxic ex-girlfriend that we just can't get rid of, right? And I was like, it's a good point. We're actually using, we're totally using her for that money. If they were to ever cut that cash flow off, they'd be gone in a heartbeat. But we're not in it for a long-term relationship. We're literally only around for that sweet cash. And if it gets cut down, bye. See you later. We wouldn't have. And
yeah, I mean, that's exactly what
stuff.
you saw. That's exactly what you saw with Leggett and Platt.
Yep. And unfortunately, the cut to Leggett and Platt, the timing of it didn't work out for the reconstitution, and it wasn't able to get, like, it should have been out last year, but the timing of it just didn't coincide. And that's one of the issues when you've got something that works by an algorithm like this does, right? There's no thought. There's nobody saying, well, we know that dividend's going to get cut, so let's drop it now. Now it looks at the date. It looks is what are the fundamentals that day, and that's it. So that is one side. I mean, there's 100 stocks in there to even that out, right?
Hey, that guy, I can't find it. I thought I had it on my notes here, but the new yield, he wants to know what's the new yield going to be. I think it dropped a little bit, right?
So yeah, it's very minor. It went from, it's like 0.07 starting yield has gone down a little bit. But you know what's interesting about that? If you look at it, so the starting yield now would be 3.8 something, right? The yield that you have on record, when you look at your brokerage, you're getting 3.5. So what that tells you is even though the yield is dropped, it's by what the stocks have in there, the yield that we've been noting and thinking we're getting is actually still lower than that, because the yield that the brokerage shows is like the 12-month trailing. It's what's in the past. Yep. Whereas what he's quoting is by looking at the average of all, like the weighted average of the actual stocks. So that shows more accurately where we're at now. And that's why come Q1, come this dividend payment we're about to get, it's going to be much higher, right? So we're not going to notice that 0.07 drop because we're still kind of catching up to what the improvements we've seen from last year. And then also the dividend growth of the fund has gone up a little bit as well. So it should offset that minor fluctuation. So that doesn't concern me too much. We'll have to see, you know, I do an estimate of the dividend, like going forward, go through all the stocks and look at their weighting and how much they pay out. And I've gotten pretty good at actually being able to calculate what the next dividend is going to be. So it'll be interesting. This next one, I've estimated it's going to be over 30% gain from last year Q1. So that's nice. I could be wrong, but I've been right the last like 2 or 3, like very close. So it's shocking. Like, remember when it was down like 22 and then everybody was like, I don't know, it seems to be trending the wrong way. And I did it and I was like, whoa, it's actually looking like 20%, 21 or something. And people are like, come on, no way. And it came true. So
hey, Craig, Lucas wants to know how many shares you have.
Well, one thing to say, there's always a bigger fish out there. I may have what I have. There's always someone with more. I have 7,065? 7,065? Yeah.
That's insane.
Yeah.
How long have you been accumulating shares of the fund? How long have you been at this?
I started in 2018, but then like really went hard in 22 because for me, it just kept going up from there. And I'm like, oh, I don't want to buy it, right? And then in 21 and 22, it was flying. People forget that in 21, in that year, when growth was flying, everything was flying, SCHD outperformed SPY that year. People say, like, this thing can't grow like SPY. It outperformed at the, like, frothiest, most growthy time ever. So don't tell me that. And anyway, so I didn't buy in, like, barely bought in 21, and then when it started dipping in 22, I went bonkers because I love this fund and I was just waiting. I'm like, it's too much, it costs too much. And then when it started coming down, I just went nuts and I haven't stopped since.
Unreal, man. And I want to throw it back to all of you guys in the chat. Let us know how many shares of the holy grail of dividend ETFs you're currently holding. I see Lost Boy has about 2,100. Craig and Mandy just shy of 15K shares Holy cow, that's unreal.
Nice.
Personally
See?
speaking,
Always
I'm sitting just hit 355 today with the weekly dollar cost average. Russ, where are you at with it?
Oh, I thought I was sorry. I saw somebody say, "Am I still here?" And then I heard you say, "Where are you?" I'm like, "I'm here. I see you guys." I don't know. I think I have 545. So
Nice, man. You and I
you
are
know,
neck. Or no, you have a couple hundred more than me. Never mind. I'm in the threes. Very
I
nice.
want to hear, you know what I want to know? So we all kind of we may have different styles for buying. Like I tend to buy on dips. Ryan, I know you just dollar cost average like every 2 weeks. Russ, I'm not sure what your strategy is, but can we share our strategy and then what your average cost is? Because I think that might be helpful for people to hear.
Absolutely.
Right?
Great idea. So, Russ and I were kind of talking about this before we went live and before you hopped on, Craig. So right now I'm just buying SCHD in my Roth IRA, which I have over on M1 Finance. And so everything is set up to be completely automated in there. So the transfers from my bank account into the Roth are automated. The weekly purchases are automated. So it just buys every single Monday for me. And it's how much it buys per week will vary just based on, the weighting of the fund in the portfolio at the time. I keep like a 60-40 split between that and VOO. And right now, I think today actually I picked up just over 4 shares and I'm currently sitting at 355.5 shares at an average cost of 25.86. So, and my goal by the end of the year is to hit 450. I think I can do that. I'm typically getting somewhere between 3 to 5 shares per week. So I shouldn't have any problem hitting that number.
That's
yeah,
cool.
same for me. I have it in the.
So
I think the last couple of years now, I think I started in 2022 was when I made the Roth. So since then, I've just been averaging into it every week. And there may come a time where I start buying it more in my taxable account. But for now, I like having the kind of the separation of passive investing in ETFs over in the Roth versus more active investing in individual companies in the taxable. I kind of like to compare and contrast those two strategies. But at some point down the road, I may decide to change course. But and if I do, I'll probably lean a bit more into SCHD over there. But for now, that's kind of how I've divvied it up. Russ, you're up, man.
Well, yeah, for me, I've got it only in the Roth, same kind of as you, I guess. And yeah, my Roth only has 4 positions. I've got SCHD and VTI, so I like that. And then, oddly enough, Visa and Harrow Incorporated, which doesn't pay a dividend. It's a little tiny pharmaceutical, ophthalmologic eye drug company. But yeah, I'm started buying it at I think December of 2022. So not, as long as you, Craig, you've been, beat both of us. But yeah, actually my average cost on those is $24.92. So I'm up 12.7%. And yeah, it's kicking me $541 a year. So it's nice. But yeah, I've been I don't know, last couple weeks I bought VTI because that had been dropping. So I want to keep that. Actually, I've been, a lot of you don't follow the channel, but I've been kind of shifting to have 85% fund exposure and then 15% individual stocks. So yeah, I've just been working on trying to get that right, get that in the ballpark. But yeah.
Hey Russ, I don't think I've gotten the chance to ask you this yet, but what kind of made you want to go more in that direction, if you don't mind me asking?
Protective against my own stupidity and ignorance of thinking that I can be a great stock picker.
I don't think you're giving yourself enough credit, man. I really don't.
Just in case I do something dumb, I won't blow us up because it's our money too. It's my family's money, my wife's, and yeah, I enjoy the challenge. I enjoy picking individual companies, but there's been times, man, where I'm like, I thought things were a great investment, and then I just look at VTI and I'm like, wow, if I would have just bought VTI, I would have been much further ahead on a total return basis, But yeah, I've enjoyed learning, sharing with all you what I'm doing. But that's my thought for it, so I can still get that a good amount of skin in the game as our portfolio gets bigger and bigger. That 15% will still be a good amount. But yeah, I don't want to, I don't know. I just want to idiot proof it, I guess, as much as I can. Well, not as much as I can, because then it would be 100% fund exposure. But I figure 15% individual is pretty good,
Yeah, I get you, man. You just are looking for more of a balance of the protection of the funds, but still having fun with, choosing some holdings, but making it a bit more of a low risk hobby.
Right. Like I have another SCHD position in Nexstar. I've been buying them for a while. I'm up
That's
to
right.
124 shares, I think, of Nexstar. But I mean, it's like I've got $20,000 in one position. That's crazy to me to think about that. And just, it hasn't done well. But yeah, I've talked to you. I've complained to you about it through text. So anyway, but yeah, that's kind of my thoughts about that.
Yeah.
Protect
So
the
over in the chat,
family.
I mean, I don't know if you guys have been seeing me just put the different comments up on the screen, everyone showing their holdings. I just got to say, you guys out there are crushing it. I'm seeing a lot of you guys, hundreds of shares of SCHD, thousands of shares of SCHD. Even some of you guys who are saying you're just starting are really stacking those shares quick. So all my friends out there, you guys are doing a fantastic job. Just keep building that thing. You really can't go wrong. A little SCHD, maybe a little SCHG, maybe some VU or VTI. You guys can't go wrong. You guys are doing good. And I also want to say, so we have 333 people in this live stream. This is by and large the most amount of people that I've ever had in a live stream. So I want to take a moment to thank all you guys for tuning in. And Russ and Craig, I don't think I could have drawn this crowd without you guys. So thank you guys for the poll there.
Dude, you know what I just remembered? I didn't see an option to share this on my channel. Like when we were on Kevin's 50th, there was a little toggle that said something like share it to your channel. And I did it, but I didn't see that. Maybe you didn't want me to. You didn't want to turn
Oh,
that
no.
on.
Did you look? Like, did you?
I did.
I think it, okay. Because
I didn't notice it, but
oh,
I don't know. Weird. Maybe Kevin did something. I don't know.
maybe it's probably Kevin's fault.
Probably.
I think that's what you're getting at.
But it was convenient. It was convenient because it was streaming through my channel like it was one of, mine. So, but
yeah,
anyway, so.
Well, sorry, man. That would have been cool to do. And I was going to ask Craig, I know you've been floating around the idea of maybe doing something on YouTube. Is that still, are you still thinking about that? Doing a channel?
I am. I'm thinking about it. It's like, the only problem is I'm so focused on SCHD, I would get tired of not tired of talking about SCHD because I could talk about it forever, but I'd run ideas to talk about SCHD. So, but I would still like to find a way to even if it's just updates and, I could talk about some other ETFs because I do mix in some other ETFs to get different exposure. So I could talk about that as strategy. Yeah, I'm considering. I know it's a lot of work though. I know you guys put in, and it's definitely not all glamour. That's for sure. So,
well, man, let me just tell you, clearly, and I've listened anytime you've been on, whether it's Russ's channel or Ari's channel or anyone else's, I've always tuned in, and you always have so much good information to share. I think you'd be doing the community a huge service by having a channel. You just have, like I said, so much good knowledge to share. It'd be fun to watch you do your thing. And I've got to say, one of the good things about doing YouTube is that, or anything like this is, and you've experienced this with Twitter or other platforms, you can make it work into your life however you want it to. So you can dedicate as much time as you want to, or as little time as you want to it. And you can really make it work for you. And if nothing else, I think it'd be really fun just to see, even just monthly portfolio updates, because you've got a crazy portfolio over there, it sounds like, and monthly dividend income updates, especially in, months like March or June or September and December, where you get those big SCHD payments. It would just be so crazy to see that breakdown. So and I'm not trying to pressure you either way. I'm saying it as a fan and a friend. I think you do a great job.
I need a little push like that, so I appreciate it. That might put me over the edge. Russ,
I'll add, dude, and it's not just that, but you also have other investments too. You have individual stocks you hold, and you sell options. You do some options trading too, so selling covered calls and whatnot, right?
Yeah, and I also, part of me is I see how much people they end up looking up to you and thinking you're smarter than them when I'm not necessarily, right? I think you guys say it all the time. Don't do what I do. I'm just Russ, I'm just a welder. I'm just. We're just regular people that have learned about investing. So, don't just assume that these guys or me know more than you know, right? I know it because I'm into it, but there's other stuff I'm not that into. And what I'm not into, I don't know that well. So like sometimes I'm taking risks that I probably shouldn't take, right? And it's the reason why I invest in SCHD, because I'm not the greatest stock picker in the world, but I'm aware of it. And the stocks I do pick now, I pick the big ones and I just hold on. Ups and downs, and they're big companies that aren't going anywhere. And I wait to go way down, and they're still good companies. And people just think it's over, but it's it's not. And that's when I buy again. Otherwise, I'm investing in ETFs, right? I try not to take too many big chances anymore. I've been through that phase where I took all the shots. I think we all have, right? I know, Ryan, your story, you started out, investing in all sorts of stuff. And I know, Russ, you've told those stories too. And I have them too, investing in SPACs and investing in whatever Jim Cramer says of the night. And I've tried all that, and I'm over that. I've been through the pain, and now I've got to be smarter about it.
Yeah. You just made me think of Ryan. I remember on one of his earlier videos, I think it was when you sold Berkshire. And I was thinking like, dude, they were probably in what, the 200s or something. Do you remember when you sold them?
It was probably around there. Yeah.
I don't
regret that though. Like, I've done pretty well with my investments, and I'm so glad that I really leaned 100% into dividend investing. The one regret I have with selling Berkshire is that now I don't have a ticket to the annual meeting. And my dad was telling me last week he's actually going this year, and I am so jealous, so jealous.
I'm going with your dad. I'm gonna go. I've got a couple of shares. I have like 4 or 5 shares. I'm gonna go with your dad, buddy.
You should, man. It's one of those bucket list things, and I would consider buying a share just to go to that. I feel like it'd be so much fun to do. Such a fun experience. Real quick, guys, we got a $2 super chat from Dom. First of all, thank you, Dom, so much. That's super nice. Thoughts on adding SCHY to SCHD, which is the REIT ETF, right?
No, that's the international version of SCHD. So it uses the exact same methodology, but looks for international stocks. So if you like what SCHD does, you want to get some international exposure, it's probably not a bad way to go. It was not doing very well for a long time, but recently with like the uptick in international stocks, it has really jumped up and it's doing great now. So not a bad way. Like Russ and I were talking about that other one, the VYMI.
Yeah.
That's the international version of VYM. And then IDVO is the international version of DVO. And then there's another one, there's an iGrow, which is the international version of DGrow. So all these dividend growth ETFs, or, DVO is a little different, but they all have their international versions. So, look into it, look into holdings, and it's a little harder to tell because you know some of these international companies, but look at the sector weighting, the dividend growth, the starting yield, the price performance, and see if it's something that would that you like. But I think SCHY is fine. I was a little concerned because it'd been lagging for so long, but like I always say with SCHD value stocks and all sorts of things, their time comes. So you can't just give up on something because it's the 5-year chart isn't perfect. It's tough because sometimes that is a reason to get out, but many times it's not. It's just not in favor at the time. But our goal is to invest for long periods of time. So you really have to think of it long term.
That's such a great point, and it's so easy for us to forget that not every strategy will not work. Let me rephrase this. No strategy will work 100% of the time. Depending on what's going on in the market, certain strategies will outperform others. Every dog has its day, and there's cycles to all of this. And, for a long while, I mean, really these last, probably since 2022 or the end of 2022, 2023 or so until coming into this year, we dividend investors we've definitely been given a hard time just because the market's been pumping and a lot of dividend stocks haven't done too well. But I've noticed that kind of be more tame so far this year, because the defensiveness has certainly paid off. And now we're starting to see dividend paying stocks or these more stable companies really starting to shine. And so not every strategy is going to work 100% of the time. And that's why it's so important to invest in a way that aligns with your temperament and really what you want out of your investments, because that's the only way you're going to be able to adhere to it through the ebbs and flows and through the times where maybe your strategy is not working as well as you'd want it to.
Right. Like everyone now is trying to pile into international, but if you had already been invested in international, like more diversified, you would have got this nice pop, right? So, the people out there that say like, well, why would you ever invest in SCHD if it's underperformed SPY for, the last 3 years instead of looking over, longer periods? Well, does that mean you don't invest in anything that, any other type of diversification? Like you don't invest in bonds, you don't invest in international, you don't invest in anything value just because they're underperforming? If you're always riding the trend, that trend will eventually change. So you're gonna get caught at some point. So yes, we're all short-sighted. Like the last 3 years incredible for growth and the Qs and for SPY, and I invest in SPY and I invest in growth, but look what's happening now. Like you've said, right? Like you could see how quickly the gap closes when there's a shift in the sentiment, right? Like very quickly. And Ryan, I watched you back in like 21 and 22 as everybody else was panicking because growth was getting destroyed. And if you watched your channel, you would have no clue because I don't think you even followed that stuff. And you were just cruising along on my portfolio, this and that. And like, it was so great. It was so great to watch. I swear. And I think it was honestly, you were not even paying attention. Like you didn't even know everyone else was getting crushed because you were doing great, And then long term, I know you're still like either neck and neck or still beating the S&P because you've stuck with your strategy, like up and down, right? And that's the way it goes. Like you're going to have, the S&P is going to have 2 years of 20%, but then they're going to have a down 30, down 15. Well, SCHD might only go up 14 one year, another year 10, and then down 6. But at the end of the day, it's still getting 8 to 10, which is the long-term growth of the S&P as well. So, and you're getting a growing income that you're not going to have to sell shares in retirement. So, and if that income is not going to fall, market crashes, the income is still there and probably still growing. So you don't have to worry if something bad happens. So come on, people. This is a
Dude, I love it. I love it.
I just listened to an interview with Barry Ritholtz last week, and he said something that was really interesting, and you reminded me of it. So he said, if you are properly diversified, it means you will have something in your portfolio that is always not doing well, because obviously then one time that'll be doing well and something else won't. So it's just the natural way to look at it. So, but again, and it's also knowing what we own and why we own something. So
you can't go chasing the trend all the time, or you're not going to get it. You're going to miss it. So find a strategy that works for you and stick with it. Right.
Absolutely. And Craig, thanks for listening to my gibberish for so long. I really appreciate it.
Oh man, yeah, I've been following you. What an honor. Here I am. I've been watching Ryan and Russ for years.
No, man, the honor's all mine. It really is. And
I'm here with Ryan.
But you spoke on something important.
Russ was the first one to have me on. Actually, Dividend Dave was the first guy to ever have me on. I'm going to give props to Dividend Dave. Canadian, fellow Canadian.
Yeah.
It's been funny, man, because and I've told Russ this before I started making videos, I would binge watch Russ. I still watch all of Russ's videos. He just, Russ was he played a big role in putting me on the path to dividend investing. Russ, PPC Ian, Dividend Data, all these great creators, and there's so many good ones in this space. And it's cool. It's cool it's been pretty full circle, being able to go from being an avid fan of these guys to now being friends with them. It just really speaks to the power of not only the internet, but also this community. It really is a very tight-knit community. Everyone is after the same thing, and we don't have to step on each other's toes to get there. I just think it's a really, really special place to be. And I feel so fortunate to be part of it.
You're here. Cheers to that. Cheers to that.
Cheers.
Cheers to the community. This Spindrift.
That's a PepsiCo product.
It's good stuff.
So let's bounce it over to the chat. What do you guys have for us? What do you guys want to know? We've got about 15-ish, maybe 12 to 15 minutes or so before we start wrapping it up. What do you guys want to know from the Three Stooges up here on the screen? Let's see if we can, maybe I can scroll up in the chat and pull something. And if you guys see something too, shout it out.
People's in the chat. What's up?
Let's see here. Going back to SCHY, does it pay every 6 months or is it a quarterly like SCHD?
They recently switched to quarterly. They used to be 6 months. Now it's quarterly.
Yeah, it's every March, July, September, December.
VYMI is quarterly too, right?
Yep.
I think so. Yeah.
It is. I just checked.
Yeah.
Let's see. Oh, what do you guys think about this? Quentin wants to know, would it be smart to have both SCHD and VYM? That's a good question. What do you guys think?
I think so. I think they're quite different. So VYM is way more stocks and more diversified. And if you see lately, like when SCHD wasn't doing as well, VYM did very well. But now VYM's dividend growth, well, it's catching up, but it had a bad dividend growth year, and then SCHD had a good dividend growth year. So yeah, they complement each other. I see no. You look at their top 10, and they're almost completely different now. They were more alike in the past, but very, very different now.
VYM in a nutshell has broader exposure, and I've got it in my notes here that it's some good pairs with it, and I think he was right. Sunday Investor. I mean, he shared so much good information where he listed some pairs. He had FDVV, which is a growth barbell, VYM for your broader exposure, and DGRO is kind of an all-weather. And he said there's only 15 to 21% weight overlap with those alternatives. So low overlap, right? That's one of the things you should focus on when buying ETFs. You don't want a ton of overlap, right?
Yeah, I think I own all three of those, really. So yeah, definitely.
Okay, so we've got a few really good ones here. So this one's kind of along the same lines, similar question. What about SCHD and DGRO? Not VYM, but DGRO. Do you think it's a good complement to SCHD?
Excellent complement, because it has the tech stuff that SCHD doesn't. It's like, if you look at the top holdings, it's got Apple, Microsoft, Visa, I think. Visa, I think, is in there too. But yeah, like a lot of the stuff that people criticize SCHD for not having, it has, but they still pay dividends. So it's very similar to the S&P, but it's still, because it's all dividend stocks, it still holds up better in bad times. So you get that, and it's got nice dividend growth, although it's been lacking in the last little bit. But it's long road will be fine.
So maybe DGRO could be kind of a happy medium between like an SCHD and a VOO or something like that.
Yeah, definitely. The yield is low. The starting yield is low, but the dividend growth is good.
This is a really. Go ahead.
Yeah,
go ahead,
Elvis
Russ,
has on there. He's got 17% overlap from SCHD and DGRO. Is there because I don't know of it, is there a comparison place where you can go to throw in a couple ETFs and see what the overlap is?
Yeah.
Oh yeah.
If you Google,
you just Google
Russ,
like, let me pull it up, man.
I've never done that, oddly enough.
I'm surprised. You haven't used this. So the website is etfrc.com, and you can just Google like ETF overlap, and it's the first one that pops up.
Beautiful.
But like you can put in, fund 1, fund 2, and it'll do it for you right here. Give you a breakdown, and that's what he was saying.
Nice.
The 17% overlap.
And if you
by
pay
weight.
for subscription, you can do like up to, I don't know, like, or you can do 3 or more.
Yeah.
Sweet.
Yeah, really, really handy tool. So I've got a really interesting question for you guys. This one's from Dan. And Dan said, if you could add the ability of a person to override the SCHD methodology on a few holdings each year, would you do it? What do you guys think?
I wouldn't.
Trust the process.
Yeah.
No.
That's what makes it what it is that there's nobody actively making any picks. But I know it's tempting, right? But
some of them too, like some of these positions. Some of these positions too are like so trivial, like we were talking about. LEG was only 0.04% of the fund before it was kicked out. Yeah. And a lot of them are that small as well. So I don't know how much of a difference it would make.
Right.
I guess it would if you chose a top holding, but even so, the max could be is 4%.
Right? Like, I think people look at it and say, okay, well, what if they had kept, like, SCHD used to have Microsoft in it like years ago, right? Because Microsoft used to pay like a 3% yield until it grew like crazy. So people look at it and say, well, what if you kept Microsoft? What if you, like, they think of winners, right? What's that survivorship bias, right? So if you only look at the winners, you're thinking, wow, how great would it have been? But you're not counting all the good picks that got pulled up, right? And then you're not looking at, again, what would have happened to the dividend yield of the fund? What would have happened to the dividend growth of the fund if you kept all these in there? Because you need that, that self-cleaning of taking out low yielders and adding in new ones to get that 12% dividend growth. So yeah, we make mistakes when we think emotionally and we try to ride the trend. So let this thing do it for you, emotionless, and then we can on our own can make mistakes, or win, right? We can pick some good stocks and win. You don't need
it'd be super interesting. I'd love to be a fly on the wall at Charles Schwab when they get the results for the reconstitution. And I would love to see their reaction to the changes, because I'm sure that behind the scenes, they're like, oh shoot, it kicked out Broadcom. We're going to get, people are not going to be happy about this. Or like, oh my gosh, we added Target. Oh my gosh, here come the boycotts, or something like that. I'd love to be a fly on the wall and see what their response is to this.
Yeah, see, that's the right perspective, because they can't do anything. They don't do anything. They just follow it and market it, and they don't even do a whole lot of that. Like, people always ask me, when's Schwab going to announce this and when they're going to do that? I'm like, they don't announce anything. We find it and tell you, like, we're the ones doing the work for them. It's hilarious.
I heard a rumor though that if and when Schwab SCHW ever was inserted in SCHD, then the whole ETF would implode. I don't know if there's any rumor to that or truth.
Yeah.
That'd be crazy. Okay, guys. So this next question, I've got 3 more for us. This next one comes from my man Teeps. Shout out Jeff Teeples. He says, I want a prediction for the trailing 12-month dividend CAGR of SCHD for 2025, looking ahead to December when we have the full year of payments. So the first, this first payment, what you're thinking is going to be 30% higher than last year. The last payment was like 20-something% higher. Q4 2024 was like 20-something% higher, wasn't it, than the previous year?
Yeah. I already forget with all this new information, but yeah, it was.
I mean, I'd be hard pressed to believe we're not going to see a double-digit, growth rate when it's all said and done for the full year. And that's a pretty easy thing to speculate just because of the history.
But it is hard to keep up when you have 2 like big ones in a row. Eventually, something like everything always balances out. Like the same thing I say with the S&P and the SHD. S&P's flying up, SHD cruising along, they come together. I think the dividend growth might actually come down to kind of even out a little more. That doesn't mean it's going to be super low, like 4 or 5%, but I do think it might come down to a lower end of 8, 7 is possible, right?
Let's see what the history has been. So
yeah, I got it on Simply Safe here. Or you got
okay, it looks like 2023 was a low year, so that was about 4%. Yeah. 2024 last year, the annual growth rate was over 12%, and then for the most part, going back all the way to really since 2018, it's been double digits with the exception of 2023. So it's got a pretty solid track record, even during the pandemic, even these rough years, 2020 to 2022, we saw double-digit increases. So it'll be definitely interesting to see how it shakes out.
According to Simply Safe, the 10-year CAGR is 11%, right on the nose. The 5-year CAGR is 11.6, and then the last 12 months was 12.2. So that's pretty damn good. They have a 11% 10-year CAGR. I mean, that's outstanding.
Yeah, I wouldn't be surprised to see it come down to like the 9 and 10%, which is still outstanding. Like, and then it goes back up to 12 the next year. Like, it's not going to be 10 and 12 every single year. We're going to get years that are 8, and like I still think the 4% that it got one year was an outlier though. And I don't think it's been lower. I couldn't see those very small. I don't think it's been lower than 6 something before that. Like, I think it was 6 something has been the lowest since inception, before the 4, right? Before there was a 4. So, but I could see there being, I wouldn't be surprised to see an 8, 9, like under 10, but in the low single digits, right? And then, hey, I'll be happy if we get more than that.
Well, I'll tell you what, man, like even if, let's say hypothetically, the CAGR slowed down, we're talking the 5-year, the 10-year CAGR, even if that slowed down to like an 8, 9%, That's still those are still very respectable dividend stats. A 3.6% yield,
starting
high
yield
single,
of almost 4%. Sorry, I didn't mean to cut you off.
No, it's okay. That you took the words right out of my mouth. That's exactly it. Let's hope it doesn't. I mean, I'd much rather get this 11.6%, but I'm also not going to, rush to sell my shares if the CAGR dipped down to upper single digits, hypothetically. That's still very respectable from a long-term
the
perspective.
5 years not going to come down that much if we get a 7 or 8% 1 year. It's still only going to come down a little bit. We'll still be up over 10. He's 7%. See, I'm thinking 8, 9 is quite possible. And then if we get double digits, the bar is lower.
Yeah.
I love people, man. He's great.
He's the man. Okay, so I've got 2 more questions for you guys. This one is from Mr. Swack. Been loading up on Ford, almost 300 shares. Is that a bad idea?
I don't like it, man. I think the auto industry is probably a shade better than the airline industry as the heavyweight champion of horrible places to invest. But you do you, man. I mean, if you like it, go for it. I wouldn't. It's just way too capital intensive, competitive. It's just not for me.
And there's no brand loyalty amongst auto manufacturers too. Like if you buy a car, it's not habitual enough for it to be ritualistic to go to the same dealership or whatever. When people go around and shop for cars, they're not just immediately going to Ford just because they have a Ford. They're going to shop around and find the best deal and the best overall car for their situation. That's going to change over the years as new models come out. So it's just a tough business to invest in.
Yep, definitely. Ask Dan Weston what he thinks of Ford.
Yeah, I was wondering if maybe that question was more so directed at Dan just to like get him riled up. I'm looking at the chat here. Okay, so last one that I have saved for you guys, and then maybe we'll start closing it down. Do you think the lows are in? Just general stock market. Are the lows in all this volatility we've been seeing this year, or are there more tough times ahead? What do you guys think? The year is still young. We're only a quarter of the way through 2025, and it is going pretty quick, but still we have a lot of year left. What do you guys think? I know it's, no one can predict the future, but gut instinct, what are you guys feeling?
I have no clue. You want me to give my spiel? There's billions and trillions of possibilities available to billions of people every second of every day. And people are crazy and people are emotional and people have recency bias and they're short-sighted and they do really nutty things. So the answer is yes, no, maybe, probably. I don't know.
And so Russ, as a follow-up to that, how will you change your strategy depending on how the macroeconomic situation plays out?
Yeah, I'm just going to keep buying. And hey, if things tank and crash, then I'm going to try and find money to buy even more if things really drop down, when things really go on sale. Because the stock market is the only place that people love to run away from a sale. So if and when things do go down, it's time to buy.
That's why you've got that extra kidney.
Exactly. That's what I've been saving. That's my dry powder fund.
Nice.
Yeah, man. I'm along for the ride, man. I enjoy the ride, up or down. It's fun, man. When things are up, you got more money. When things are down, you can buy things for cheaper. So I really enjoy it. And we should be happy as accumulators when you've got 5, 10, 15 years or more. When there's turmoil, this is fantastic. This is great. You want to buy. Don't get scared out. If you look at the statistics, if you're down 10%, that's a beautiful time to buy. It usually recovers within months. If it continues to go lower, like Russ said, try to find money and buy more, because again, you're going to end up rebounding. Just try not to buy the crap in those times. If you're scared, focus on the S&Ps, focus on the big ETFs that will come back. You don't have to worry about the individual stocks that are going to get crushed, or find companies you understand and really get, and you really know what's going on with them. They're not going anywhere and they'll be here in 5, 10 years, and invest in those. So yeah, I don't know what's going to happen, but I do imagine with what's happening, there's going to be knee-jerk reactions to every little thing, and those will be buying opportunities, right? So I doubt we're done. Every time it goes, there's a big green day, people think it's done, it's over, we're going this direction forever. When we're going down, it's over, we're going down forever. So just relax. and buy.
For anyone
Yeah.
watching, here's a way to calm your worried mind. There's a saying, when in doubt, zoom out. And if you want to
Yes.
zoom out, just go to Google and put in, lifetime stock market chart or anything like that and you'll find it. They'll show anywhere from like the 1880s till today. It's just up and to the right. And it doesn't mean the market goes up every day, every month, every year, but over many years, it goes up and to the right because businesses grow, businesses innovate, businesses expand, and that's doing what it's supposed to do. So when in doubt, zoom out.
And if they don't, they'll be kicked out of SCHD and you don't have to worry about it.
Right.
Well, guys, I think this is a pretty good place to wrap it up. I want to thank you guys so much for taking the time to hop on here with me. I think this should be an annual tradition, Reconstitution Day, we make it a holiday and we do this till we're all old and gray. And because this was a lot of fun. So thank you guys so much for taking the time. All of you guys tuning in. I can't even believe there's 340 people in this live stream right now. Seriously, thank all of you guys for taking the time to hang out with us tonight. It was a lot of fun. Happy Reconstitution Day to all of you guys. Go swoop up some more shares of your favorite dividend ETF this week, this year, and forevermore. It's gonna be good no matter what happens. So anyway, guys, thank you so much for the time, and we'll see you in the next one.
Thanks, guys. Peace.